Apple's marching towards a $4 trillion valuation in 2026, thanks to a monster Q4 2025 earnings report. But here's the thing. While everyone's focused on iPhone sales, there's a quiet war brewing in AI that could rip a massive hole in their profit margins. Think about it, what happens when the very AI services everyone expects from Apple aren't theirs anymore? The tech giants are all fighting for this next frontier, but for years, Apple's managed to maintain a vice grip on where the money flows. Now, with new open source models and aggressive plays from competitors, that grip is looking a lot less grippy. Is this the moment their AI profit dominance finally cracks? We're going to dive into the data from the past year, look at some surprising moves by competitors, and break down what this could mean for Apple's bottom line by 2030. What if I told you that Apple, a company currently valued near a staggering $4 trillion as of February 2026, has been the quietest, yet most aggressive, acquirer of AI and machine learning companies since 2017? We're talking about an almost unheard of pace of acquisitions, all while staying mostly silent on its grand AI strategy. It's a fascinating paradox, especially when you consider that Apple's fiscal fourth quarter 2025 earnings, reported on October 30, 2025, showed record-breaking revenue. This isn't just about selling more iPhones, it's about a foundational shift in how tech companies will make money in the coming decade. We've watched the AI landscape explode, with companies throwing billions into development, sometimes with more hype than actual product. But what if Apple, known for its polished, user-centric experiences, has been playing a longer game? The question isn't whether Apple will integrate AI, it's how their unique, platform-driven approach, where developers can create one distributable for both mobile and desktop, accessing local large language models, will reshape the entire industry. User Walter, commenting on a recent piece, predicts that within 2 years, Apple will have the best consumer AI story. This isn't a small claim, considering the fierce competition from giants like Microsoft and Google. Today, we're going to dive into the data, look at Apple's strategic moves, and explore what this could mean for the future of AI profit. The lesson here is that sometimes, the loudest voices aren't always the ones making the deepest waves. This brings us to the AI market's current state, which, let's be honest, feels like a roller coaster. The State of Artificial Intelligence Entering 2026 report, released by France Épargne Research on December 20, 2025, describes an unprecedented inflection point in the industry. Looking at November and December 2025 data, the report explicitly called out a speculative bubble of historic proportions. Think of it like the dot-com era, where even companies with minimal revenue were fetching sky-high valuations. But here's the kicker. The same report also suggested the underlying technology is more foundation. This implies that while the market might be getting ahead of itself, the fundamental technological progress is real and robust. A lot of this market dynamic has been heavily influenced by the Federal Reserve's rate decisions. We saw 11 consecutive rate hikes from 2022 to 2023, taking the federal funds rate from essentially 0% all the way up to 5.25% to 5.50%. This dramatically impacted investor appetite for high-growth tech, like AI, making borrowing more expensive and future earnings less attractive in present value terms. By July 10, 2026, Karen Verapari, a CFA, noted a significant shift in the Fed's outlook, with markets pricing in continued high rates instead of the earlier expected cuts. This added even more pressure to valuations, as the cheaper money era for growth stocks seemed to be firmly in the rearview mirror. The lesson here is that even revolutionary technology isn't immune to macroeconomic forces, especially interest rates. Now, as Apple navigates this complex AI landscape, the question of its unstoppable valuation becomes even more intriguing. Tie-ins. This brings us to Apple's unstoppable valuation. As of February 9, 2026, Apple Incorporated, ticker symbol Apple, has solidified its leadership, pushing its valuation towards a historic $4 trillion milestone. This isn't a coincidence, it follows a blockbuster fiscal fourth quarter 2025 earnings report released on October 30, 2025, which detailed record-breaking revenue of $102.47 billion, exceeding analyst expectations by a comfortable margin. Think about that. Over $100 billion in a single quarter, fueled by strong iPhone 17 sales and continued growth in its services division, which alone generated $27.8 billion. It's why, despite external market volatility or even speculative bubbles of historic proportions in the broader AI sector, Apple's core business performance continues to drive immense investor confidence. We saw a powerful glimpse of this on October 28, 2025, when Apple briefly crossed the $4 trillion mark in intraday trading before closing slightly under it $3.99 trillion. For context, only Nvidia, which then stood at an astounding $4.88 trillion, and Microsoft, at roughly $4.1 trillion, had breached that threshold before. The lesson here is that Apple's consistent financial strength and colossal market capitalization provide a robust foundation. This allows them to make strategic long-term investments in advanced AI research and development, even if their public AI strategy appears more measured than, say, a nimble startup like Anthropic or a venture capital-backed firm. The sheer scale of Apple's valuation, overseen by CEO Tim Cook and CFO Luca Maestri, positions it uniquely to weather market shifts, absorb substantial R&D costs, and invest aggressively when long-term opportunities arise, potentially outlasting less capitalized competitors in the AI race. The big question, though, is: how is Apple playing this AI game behind the scenes, beyond the public eye? Exceeding expectations. Now, it's easy to look at that staggering $4 trillion valuation and think Apple is just riding the general AI wave. But what if I told you that beneath the surface, Apple has been the leading acquirer of AI and machine learning companies since 2017? We're talking about a robust, sustained internal commitment to AI development, long before many of its competitors started making headlines with their own LLMs. Unlike Google or Meta, which have publicly showcased their large language models and AI research, Apple has maintained a degree of public silence on its grand AI vision. Instead of hyping nascent technologies, their strategy has been to integrate AI features seamlessly into existing products, almost making it feel invisible. By 2023, you could clearly see AI's practical integration in Apple products, enhancing user experience through features like improved device interaction, smarter photo organization, and enhanced Siri capabilities, even if Siri has faced criticism for underperforming rivals like Google Assistant and ChatGPT, as noted in a February 3, 2026, article by Abel Rodriguez and Ellen Glover. This slow and steady approach, preferring practical, user-centric AI over speculative models that might expose privacy or ethical concerns, has been a hallmark of CEO Tim Cook's strategic direction. It's why you didn't hear Apple Intelligence screamed from the rooftops at the iPhone 17 debut. User Gwalter, in a comment 7 months ago, actually predicted this would become a strength, arguing Apple will have the best consumer AI story within 2 years, by mid-2026. This quiet strategy positions Apple not just to compete, but to truly own consumer AI. Its grand AI strategy. It's a fascinating paradox, especially when you consider that Apple's the platform play. How Apple plans to own consumer AI by 2026. Exceeding expectations. Now, it's easy to look at that staggering $4 trillion valuation and think Apple is just riding the general AI wave. But what if I told you that beneath the surface, Apple has been the leading acquirer of AI and machine learning companies since 2017. We're talking about a robust, sustained internal commitment to AI development, long before many of its competitors started making headlines. This deep, quiet investment is exactly what expert analyst Walter believes will give Apple the best consumer AI story by mid-2026. Think about it. Apple's greatest strength has always been its integrated ecosystem. Geeky Bear echoed this in a recent forum, pointing out that Apple's unique platform allows developers to create a single distributable application that works seamlessly across both mobile, like your iPhone, and desktop, your MacBook. This isn't just a convenience, it's a strategic advantage, especially when it comes to AI. This platform provides standardized access to what we call local LLs, or large language models, directly on your devices. Unlike many competitors that rely on sending all your data to the cloud for processing, Apple is building the capability for your device to handle much of that AI work itself. For example, imagine dictating a complex email to Siri, and instead of your voice memo traveling to a distant server and back, your iPhone processes it instantly, securely, and privately, all within the device. This local LL access isn't just faster, it significantly enhances privacy and security, hallmarks of Apple's product philosophy. By optimizing AI integration from the silicon up through the software, Apple ensures a consistent, secure, and superior user experience across its entire ecosystem. The lesson here is that control over both hardware and software allows for a level of AI optimization and user experience that cloud-dependent solutions simply can't match. The stranglehold question. Can anyone truly break Apple's grip? So, with this kind of financial muscle, the real question becomes: can anyone actually break Apple's grip? As of February 9, 2026, Apple Incorporated is valued at an astonishing $4 trillion, and that record-breaking fiscal Q4 2025 revenue of $102.47 billion means it has unparalleled financial might to invest heavily in AI, even if the market gets volatile. This isn't about a fleeting trend for Apple. Their consistent strategy of acquiring AI companies since 2017 shows a deeply entrenched, long-term commitment that actually predates much of the current AI hype cycle. They've been building this moat for years. Consider the State of Artificial Intelligence Entering 2026 report by France Épargne Research, published December 20, 2025. It details an unprecedented inflection point in the AI industry, pointing to its speculative bubble of historic proportions. Yet, Apple's predicted role as the best consumer AI story by mid-2026, driven by its integrated platform and local large language model capabilities, suggests they're insulated. Competitors face a monumental challenge in trying to match Apple's unique integrated hardware-software approach. Take the privacy-centric local AI solutions they're developing. It's not just about a cool new feature, it's about control over user data on a device, which builds trust. The lesson here is that the question isn't simply who can innovate in AI. It's about who can scale that innovation, integrate it seamlessly into an existing ecosystem, and, crucially, monetize it as effectively as Apple has demonstrated it can. So, when we zoom out, the real story here isn't about whether Apple's AI stranglehold is breaking. It's about how their long-term, deliberate strategy, combined with their unmatched financial power, that $4 trillion valuation and the $102.47 billion in Q4 2025 revenue, allows them to weather the broader AI market's speculative bubble of historic proportions, as France Épargne Research put it in December 2025. While other companies might be chasing hype, Apple's quiet acquisition spree since 2017 and their integrated platform play means they are uniquely positioned to expand their dominance in consumer AI by mid-2026, not relinquish it. The lesson here is that deep pockets and a patient, integrated strategy can be a more powerful force than short-term market euphoria. Have you ever invested in a company that seemed quiet on a trend, only for them to emerge as a dominant player years later? Share your experiences in the comments below. And if you want to understand the true financial mechanics behind these tech giants, make sure you hit that subscribe button for more deep dives. If you like this breakdown, my analysis of how Amazon's pivot to healthcare in 2024 is impacting the industry's profitability is exactly the next thing you should watch.